Okay, so let's go ahead and put the nail in the coffin today. Welcome back to the channel, everyone. I want to talk about when we're looking at supply and demand trading. I'm going to go into detail. It's very simplistic and very easy to understand, all right? Three things that I am looking for, all right? In order for me or to give me a clear definition which allows me to take a solid trade entry, okay? We're going to talk about that today, so let's go ahead and jump into the video. But before we do so, please take the time to go ahead and subscribe to the channel, sub to the channel if you have not done so, all right, by clicking on the red sub button down below. Click on the bell next to it. Make sure you turn your post notifications on so you never miss one of the uploads here on the channel, because we are here on this channel, we have great content, okay? I'm giving away this information for free. I want to see other people succeed. I have nothing to hide. I want to be able to just share what I know, okay? Nothing wrong with that, right? So also, if you're interested in joining our Discord, you can find the link down in the description portion of the video below, because I know tons of people have been asking about that. Again, it's down in the description portion of the video. We have roughly over 900 members and probably more than that by now. I'm not sure, but we are growing by the day. It's a great channel or community where you can come over and two things. We have a general chat channel, and then we also have the trading floor. I'll talk about those more at the end, but let's go ahead and talk about today's topic about my style of trading, which is centered around supply and demand style trading, and those three steps of what we look for when we are taking those entries, okay? Because sometimes I believe people complicate things a little more than they should, and when trading is just basically a pure art form that you have to really hone in on and understand. Two key concepts that I always talk about is what? Market structure, price action, okay? Be able to read the charts correctly, all right? So I want to talk about the supply setup here, all right? And what I actually look for. Number one thing, okay? All right? The number one thing that I look for is a pure, clear, defined break in structure, all right? Okay, let's talk about that. Now, follow with me. If you notice here, this is off of a 12 range chart. It could be a 5-minute chart if you're a time-based chart trader. Not saying the two are, that the 12 range is the 5 range or in comparison to one another. I'm not saying that, okay? I'm just telling you that if you're time-based, then you may want to try to figure out which charts work best for you. I see a lot of traders using a 60-minute, a 5-minute, maybe a 1-minute, whatever the case is. For me, I trade using the 60 range, the 12 range, the 12 range is more so my anchor or my entry chart. So anyways, what we see here is what? The market moving to the downside, making lower lows and lower highs before turning direction and doing what? Shifting to the upside, making higher highs and higher lows, right? And it takes out this area of structure or this area of, clears this area of resistance right here, right? As it's moving higher, okay? Making higher highs and higher lows. Now, this box right here, pay close attention to this box. We're going to go through a rundown of using a supply example in the 3-step process that I look for. These 3 key things that I identify, all right? Simple, that helps me get into a trade, all right? All right, 1, a break of structure. So as price moved to the upside here, made these higher highs and higher lows, we had a high right here. Then price turns and makes a shift to the downside. Price can change direction at any given moment. We all know that, right? Okay. It's just that sometimes on a higher time frame, it may follow suit and you may see it trending for a longer period of time. Now, this is me taking entries just basically using one chart. Yes, you can trade from one chart if you understand how to read the charts correctly and know what you're looking for, okay? All right. So price makes higher highs and higher lows, and then it turns direction. Now, what I see coming out of this area right here is what? Price makes a low, lower high, and breaks lower, correct? All right. Taking out structure to the downside right here. Taking out this area here at, say, 4,005, right? Now, that's the first thing I want to see is a break of structure, meaning the price is shifted, okay, and move to the downside, break of structure. Now, it could be a break of structure to the upside as well, which we're trying to find an example of that, but I want to talk about this supply setup right here because it clearly outlines everything that I look for, all right? Break of structure to the downside, taking out this key area right here at 4,005, all right? Okay, moving to the downside. Now we have to ask ourselves, we've already covered the first step, break of structure. Part 2, step 2, what are we looking for next? An aggressive area of selling, okay, as price moved to the downside, okay? Now we see when price moved here, pull back, broke lower, okay? We see this area right here where price just slammed to the downside. Now you have to understand what's going on there, and that is the banks or institutions are quickly trying to fill orders to move the market in a certain direction fairly fast, okay? So what we see here is that the market moves quickly to the downside right here as it makes this swing or shift to the downside, leaving behind, okay, all right, a gap right here. I'm going to show you the gap. So number 2, we want to see aggressive selling when we are trading from a supply area, okay? That's number 2. So we see aggressive selling coming out of this area here, right? As price moves lower and breaks this area structure to the downside. Number 3, okay? Number 3. These are just the simple steps that you need to look for, all right? Number 3, we want to see price retrace back to that area, but before it does so, we want to ask ourselves this question here. Was there a gap that was left when price made this aggressive selling to the downside? Look at this area here. I'll blow it up for you. Okay? Look, when price moved lower right here to the downside, look, red candle, red candle, red candle, red candle, red candle. Now, as price formed this swing to the downside with its aggressive selling took place at, its final push back to the upside before it moved lower, okay? This is the institutions or banks getting ready for a play to the downside, okay? They start pretty much faking the market out in a sense, all right? Retail traders out by making it seem like they're trying to move higher when they start feeling basically buying the market back to the upside here, okay? All right, it's just a technique or a game they like to play, all right? Before they fold and push the market lower right here. So they buy the market back up a little bit or push the market back up. So that means they're putting money into the market to push it higher, but their end all goal is to basically stop traders out, collect money, push the market back lower, okay? And I'm gonna show you this move, okay, that they actually play. It's like playing a game of chess. You just have to be able to follow with them. All right, so as they move the market up a little bit, push it up, okay, they turn the market back around and boom, aggressive selling. They start filling orders to the downside, all right? Now, you have to look for what I call gaps in the market, all right? Yes, this is aggressive selling. So coming out of an aggressive selling, you want to see, was there anywhere where price left a gap at, which is classified as an imbalance. So we'll stop here. And when price makes a move to the downside, it breaks below this first green candle to the downside where? Right here, okay? So we mark the imbalance or gap from the bottom at the break of this green candle right here, okay? With this red candle closed below that green candle, this was the last major push to the upside where the institutions or banks were trying to, get ready for their play, okay? They moved the market higher off this last green candle to the upside here. Look to see what happens as the market pushes back down, where they start doing this aggressive selling tactic to the downside. They break below that green candle right there. So you put your little line or arrow right there below it. This was the candle that took out that green candle right there, okay? As it pushed lower to the downside, all right? So we mark our second arrow right there. There's a gap filled right here in this area, as well as there's other gaps as the market's moving lower. Like from this candle here, is this candle close to the downside here, this red. The next candle that closed below it, it left a gap from here to right here. So let's make that a little straighter there. But what you see is multiple gaps on the move to the downside as price broke this area of structure right here at 4,005. Where you have this nice swing with aggressive selling. Now you ask yourself this question as well: was there aggressive selling in this area here? Yes, there was. In price, was there a gap? Yes, there was. There was a gap from, say, for instance, let's just say, let's see, right here as price pulled back a little bit, made a shift to the downside. This red candle here, taking out the bottom end of clearing this green candle last move to the upside right here, clearly out, left a gap right here. All right. Now the thing about it is here, if I'm not a fib trader, but what I like to show people is that you want to kind of get a sense of where the market could pull back to. So if this was the move to the downside right here, right, I'm running a fib from here, the high right here, down to the low right here. I don't want to be selling right here. Even though we're above a high volume area, that only puts us at around the 23.6% fib level, right? I'm not trading fibs, guys. I'm just showing you can use it as a measure or a tool to kind of give you some insight of where you could possibly take trades from. Because I say this before, take your inch or look for, I'm not saying take your entries, but look for opportunity back at a supply area where you are above the 50% area if you're looking to sell, and the opposite on the flip side if you're looking to buy, okay? So I'm looking above this area here, above the 50% area, to take some means of a short if price can pull back to a key area supply. Now, when price pulls back right here, right? Look over to your right where we're at. We're above a high volume area, but we've tapped into the supply area as well. And you have to ask yourself, where are there gaps? Are there gaps that need to be filled here? Yes. So again, number 2, what you're looking for is aggressive selling to the downside, okay? Where price also left gaps, okay? Because that's going to increase the probability of your trade back down to the downside, okay? So 2, aggressive selling to the downside, leaving behind gaps in the market, okay? And look for price to retrace back to a key area supply, in this case here above the 50% area. As long as it's above the 50% area where there's aggressive selling and price left behind gaps in the market or imbalances, those are the areas you can hone in on or zoom in on to really start to look for something, some activity, some rejection to happen when price gets back to that supply zone. So mark your supply zone. Now we're going to take the fib off here, okay? And the third step in our process here that helps us gauge, when we should get into an actual trade, because that's probably the biggest thing people always ask all the time is, once price gets back to that supply zone, what are you looking for? Or gets back to any zone, the demand zone, if it was demand in this case here, what are we looking for? The last step that we are trying to clearly identify, which helps us get into a trade, is the rejection piece. The third step I'm looking for is a rejection, okay? What does that mean? A break of a candle in the opposite direction. Now, one thing that I clearly like to see or like to gauge once I'm into the trade, so let's say here we get the break of a candle below here, meaning this last green candle to the upside, we're looking for that third thing to happen for which gives us that rejection, break of a candle to the downside. This candle right here closed to the downside. Now, what I want to see below me is that it makes sure I have enough area to trade back to, okay? I don't want to get into a trade where, be honest with you, where it could quickly stop me out. I mean, the price, I get into a trade here, it gives me a few ticks, and then it turns back around and moves back to the upside. I want to have enough area to be able to trade from, enough meat on the bone there to be able to pick up some good profit, okay? Because those days of just trying to just quickly scalp for, a couple ticks, whatever the case is, I'm really trying to increase my trade size or increase my area of profit now. That is my number one goal now going into this year and moving forward, because I really want to kind of limit the number of trades taken now, because if you have been trading for enough period of time or a certain period of time, that the more trades you actually take, the more risk you're putting on, right? In a sense, okay? So we want to practice proper trade management and try to eliminate the number of trades that we actually take and just really focus on more so those high probability setups, okay? So in this type of setup here, environment, what we see going on here, look what happened as price retraced back to the supply zone right here. Now, you see where you have aggressive selling, buying back to the upside right here, okay? Now, as this red candle took out, once it tapped into the supply zone, this green candle right here, so that's the break of a candle to the downside, there are gaps coming from this aggressive buying back to the upside, where I said, okay, price probably is going to want to fill that area in, sorry guys. So we got the rejection at the top end of supply, looking to fill, look, this aggressive buying right here. This is the kind of a great setup of what you should be looking for, especially if you can catch a move like this. If you see setups like this happen time and time again, not to say they happen as clean as this all the time, but the thing about it is that if you see something like this and you see the opportunity, try to get in on that entry, okay, once you get the rejection. But you got to be able to make sure all the steps line up, okay? And that step-by-step process, everything folds in together, okay? So just take it one step at a time, all right? So we get the break of the candle to the downside. There are Lots of aggressive buying here. So price is basically, this is classified as an area of demand down here at the bottom. So because you have aggressive buying back to the upside, taking out some, structure as it's moving to the upside. So I'm looking to take the price back down to where? Back down here to fill this gap where it left right here, especially where this aggressive buying started at, right? So I get in on the short at the break of the candle, aiming for a price to come back down here, at least to this area here at 4,004. So if you got in right here at 4,012, took it down to 4,004, that's 8 points right there you could have picked up on that move. The same type thing, steps or process you're going to want to look for if you see a setup that happens in an area of demand, okay? The same type setup, all right? Number one, you're looking for that breaker structure, all right? Number two, you're looking for aggressive selling coming out of an area. This is based off supply or demand if it's a demand setup. So aggressive selling in regards to this setup here. And then you're looking for, in that number two step or process, you're looking for that aggressive selling, you're looking for gaps or imbalances, if you want to call it that. I call it gaps just to make it simple. And then the third thing we're looking for is just price to pull back to that area of supply here, and the rejection. The third step or process is the retracement back to the zone, supply here, and then look for the rejection. That means a break of a candle in the opposite direction, okay? And what helps me out is that I always want to make sure before I take my trade, okay? Because I'm always looking ahead of time before I get into my trades. When I saw this setup unfolding right here, I said the supply right here, because we got, a major shift to the downside with aggressive selling. So I'm looking as price is moving back to the upside here, retracing back to the zone. What kind of structure is going on here? Well, price action, is it making little swings to the upside? Because price could have made some swings to the upside here, and in that case, it would have narrowed my opportunity for profit on the rejection back to the downside, because I know price could maybe stop at a swing here, stop at a swing here, if swings formed or developed on this retracement back to the upside here. But it didn't. What it did was it left a clean setup back to the upside where you had an aggressive buying come out this area here, retracing back, and then we got the rejection, leaving these imbalances or gaps below. I'm taking it all the way back down here to where price originally started, moving to the upside here with the aggressive buying back to the area of supply, okay? So that's just a simple 3-step process that I wanted to kind of cover today that would help you out. This is not hard stuff, guys. It's very simple, but you just have to be mindful and pay close attention to the market as it is, basically developing these setups in the market, key areas of supply and demand. That's all I have for you guys today. Again, if you're interested in joining the Discord, I said that the link is down in the description portion of the video. Just to go a little bit more detail, there are 2 channels on the Discord, the general chat channel where you can come over and converse about the future markets along or with other fellow traders or future traders in the Discord, and basically just converse if you have questions about certain things surrounding the future markets. And then we have the trading floor where just as future traders we come together on a daily basis when the market is actually open, and we screenshot and share our entries, our levels or zones of interest and things of that nature. So if you're interested in joining the community, you find that link down in the description portion of the video. That's all I have for you guys in this video today. I appreciate you tuning in. Look forward to another successful and profitable trading week. And if you're trading this week, please be safe. I'll see you in the next video. Take care.